Time now for Hot Picks. Usually our guests give us three of their top buys, but today we're going to talk about three stocks you should short. Here to give us those three hot picks in stocks to short is Brad Lamensdorf, co-portfolio manager at Ranger Equity Bear ETF. And Ryan, thanks very much for joining. Or sorry, Brad, excuse me. Brad, thank you for joining us today. Let's get right into it and talk about the three you're interested in. Think we should be looking at shorting. Stanley, Black & Decker. What caught your attention with that?
So for years, say 4 or 5 years ago, we had been short Snap-on for a while. We had covered it for a modest profit. We got a little concerned about the software programs that they were designing internally and have done a great job at creating a lot of value for their shareholders. So we kind of moved away. But over the last 5 or 10 years, Stanley Works has continued with inside of a very dangerous practice. That's what really moved us to Snap-on, which is they've got a very large finance arm that they use to finance different sales to their customers. But their finance arm has grown from, like, say, 5% of gross sales 10, 12 years ago to something like 50%, which is about where Snap-on is too. And the reason that it's dangerous when a company gets to those kind of levels is because there's always the opportunity for them to go ahead and make some sales that a buyer would not normally get to buy because he couldn't come up with the purchase money. And they take on bad credit. And we've been short CarMax for a long time. We covered it on this recent earnings. They had a very similar situation where they had a very large finance arm where they were allowing their customers to buy cars, and they're moving underneath, the pole that other companies would allow. So we think there's a lot of trouble coming from their finance division.
And where would you be comfortable with something like that? I mean, obviously, right now you're looking for the short, but when it gets that high, the alarm bells go off. What would you like to see them bring it back down to?
Oh, I think a conservative number is closer to 20 to 30%. And maybe what also they could do is they could convince the investment street, the Wall Street, that their credit, that what they're creating, their loans are more solid. But there's always that opportunity for a company to know when their sales are slowing to use shenanigans and their balance sheet and different types of offerings, pulling forward earnings, discounts, whatever it may be, to make their earnings now, which of course they're pulling from the future, which makes it harder for them to keep their continued growth going. Okay,
let's move over to Cable One, Cabo.
So we all know that the cable companies have been in a downturn. We've been short some of them. This is one that we've chosen. We've been short it most of the year. The reason we covered it when it got hit and it's bounced, we're back in it. And we just think that the pricing, it just really gets real simple. The pricing is still extremely high relative to the marketplace. And I think they're going to have to cut their pricing to stabilize things. And you're probably talking more like a $75 stock.
Okay, and we want to get in that one last one, credit acceptance.
So we've been short this a while. It's been very frustrating, but the risk dynamic is still there, which is most of these type of, first off, ABS credit, which is car credit, we think is completely, that's what is starting to take CarMax out. You're going to see this a lot more. You saw it in some of the regional banks and some of their other type of lending. This is going to start affecting companies in this area. Credit Acceptance Corp, that's all they do. But the interesting thing for me as a short seller is that it trades at 3 times price to sales. Traditionally, these companies trade between 1 and 1.5 times. Take Ally, for instance. So Credit Acceptance Corp, they don't do anything much better, say, than Ally does. They're both very similar businesses. Ally's probably more general. However, they really shouldn't trade at that type of disparity. And we feel like when the growth rate is slowing and you see that in the numbers, that they'll come down to a 1.5 times price to sales pretty quick too, which means there's a 30 to 50% drop in their stock ahead of them possibly. So a lot of risk.
And how long you?
Trading at a high multiple.
Sorry, finish that. I cut you off there.
Well, just trading at a high multiple. So when you're trading at that kind of high multiple and you disappoint, the stock reacts much more unfavorably than if it were just a values-oriented stock trading at a P of 12 and price to book of 1.
And how long are you holding for?
We've been holding it. This is actually one of our longer shorts. We traditionally hold shorts anywhere from 3 to 5 quarters. This is probably going on almost a year and a half. But it has been an underperformer. So, what our fund tries to do is we try to make the alpha on the downside when the markets go down. And when the markets go up, we try not to get banged up as bad as the market. This year, we're 1,500 basis points ahead of our benchmark. Last year, we were over 1,000. So, we're not losing as much as being short the indexes. And when the markets come down, the hammer comes down on many of our stocks. They tend to underperform dramatically over the indexes due to the fact that they have either pulled their business forward or they just don't have the earnings power to continue to buy back shares like some of the other companies do.
And it's going to go back to Stanley and Cable and the same question. How long have you been holding on to those for, and how long can you see yourself holding?
Stanley Works has been a position for quite some time, probably a couple of quarters. And Cable One, when it hits our target, we're gone. We rarely think anything's going to go to zero. So usually we're looking for the company to have to say, look, we're going to have to lower prices. Clearly, they would have to guide down. That's probably our catalyst to cover our short with inside of, say, Cable One.
Okay. Brad, thank you very much for joining us today. We appreciate it.
Great. Thank you.
Brad Lamensdorf is co-portfolio manager at Ranger Equity Bear ETF.